Happy Wednesday, everyone. It's Eric Peltier with Citywide Home Loans. Thanks for watching my quick Wednesday Mortgage Minute for October 16th. It's been a long time since I sent one of these out. My apologies. I'm going to try to get them out very regularly now because I think that there's a lot of good information that I could be conveying to you. So let's start out with something as exciting as FHA Spot Approvals. So a little bit of history. When we were doing an FHA loan on a condominium years ago, if the entire project itself wasn't approved, we could do a spot approval for just the one unit that we were going to lend on. Then that went away. It's been gone for like, I don't know, 6, 7, 8 years, something like that. But FHA has decided to start allowing these spot approvals again, but they're not calling them spot approvals, they're calling them single unit approvals, which means we can just get an approval on one unit, even if the condo project as a whole isn't approved. Now, this came out a little bit ago, and FHA has clarified a few of the guidelines, so let's get into these clarifications. First of all, we have to check to make sure that the project itself isn't approved. Obviously, if the whole project is approved, why would we do a spot approval? But they wanted to make sure we understood that. And then unapproved phases within an approved project will not be eligible under the single unit approval project. What the heck does that mean? So a lot of times FHA will approve a large condominium project as a blanket, but then be specific about the phases that have been approved. So, you know, if a condominium project has like 10 buildings, then each building might be a phase. And so they might approve the project as a whole with phases 1, 2, and 3 approved and done, but then 4 through 10 are not approved yet. So what they're saying is we can't get a spot approval on a phase that's within a whole project. I don't know. I think that's going to happen very rarely, but it could happen. We can't do these spot approvals on manual underwrites. That's kind of understandable. And then we also need a certificate of occupancy on the project more than 1 year, or a unit has to have been owned previously. Okay, so like if somebody bought a brand new unit, 6 months later they're reselling it, then we could do a spot approval on that. But otherwise, for a property that's not been owned before, or a unit that hasn't been owned before, we need the certificate of occupancy to be longer than 1 year. The project must have at least 5 or more units. No manufactured homes, which sounds crazy, but I have heard out there that there are condominium projects where the units put on the lots were actually condominiums. It sounds crazy. And then the condominium doesn't have any other ineligible characteristics. So there's some information for you. Obviously, if you're headed down the road of a condominium purchase with a person who needs an FHA loan, it's best to talk to me, your lender, as early as possible to make sure that we're finding them the right property to get under contract on. Next thing I want to talk about is I'm running a little contest. Down below, there will be a link to my Facebook page where I've got a little contest going. Please guess how much you think this property is going to transact for. It's just a little bit of fun surrounding a very nice property here in Boulder. Last thing I want to talk about is I recently was conversing with a client about whether to put 20% down, okay, on a single family home purchase. And they were really stretching to get to that 20% down. They're pulling money from all these different places. And then to get from 15 to 20% down, that last little chunk of money was really hard to get to. It involved liquidating some stuff that they didn't want to liquidate. And what I did was I presented them with, well, what if you just did 15% down and took MI on it? And I ran these numbers for this video. If somebody has a $400,000 loan and a really good credit score, and they're only doing 15% down, the mortgage insurance every month is just $56 a month, okay? And when I presented that to the client and how they could just pay that for 2 years and then hopefully get rid of the mortgage insurance, it made a ton of sense not to try to figure out a way to liquidate that last little chunk of money to get from 15 to 20% down. So have your clients talk to me if they're sort of stretching to get to 20% down. They might not need to. It might not be worthwhile. So thank you very much for watching my Wednesday Mortgage Minute. I will see you next week. Thanks.